Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me today live at the New York Stock Exchange is Tai Wong, independent proprietary trader. Tai, happy Monday and good morning to you.
Oh, good to be here. It's an interesting day today for sure.
Indeed. So it is Columbus Day here, Indigenous Peoples Day, but outside of the New York Stock Exchange, there are protests going on, so it's been quite a morning so far.
Yeah, it was a little more difficult to get in here than usually. You can actually hear the chanting from here, and it appears that they're shouting "Stop arming Israel," and I'm thinking that this might be a reaction to what happened over the weekend, where the U.S. is deploying an anti-missile system called THAAD, which let me get it correct. I think it's the Terminal High Altitude Area Defense Anti-Missile System, and you need trained people to operate it. So I think there are at least 100 American troops getting deployed along with that system. So this may be a protest that in reaction to that. They didn't announce it ahead of time, so apparently it's been quite active morning outside.
Mm-hmm. Indeed, Tai. And initially, you would think if there are protests taking place, it might be against Columbus Day here in New York.
Yeah.
There are celebrations happening throughout the city, including the parade uptown and around here on Wall Street, over on Broadway, heading towards Battery Park. There is the annual Columbus Day Festival, but indeed it was actually a protest taking place, and it is still unfolding outside of the exchange as we speak. But right now, let's take a look at the markets, because the Dow and S&P 500 closed at new record highs last week, and this morning it does appear as though the major averages are extending gains. So the Dow was lower earlier on the session, but we are seeing it eke out a gain above the flat line with an advance of 0.1%, and we're seeing the NASDAQ advance significantly this morning. It's off its session highs, but it's still up by over 100 points, or 0.6%, and the S&P 500, it continues to soar higher by 0.5% in New York morning trade, extending that record high we saw last week. So, Tai, here we are at the beginning of the week. We have a lot to cover, as you mentioned, geopolitical tensions, but earnings season is underway, and some key names that we're watching.
Yeah, a couple things to think about. Well, today is not a stock market holiday, but it is a bond market holiday. Yes. So it was easier for me to park at the station today, for which I'm pretty glad. But we have a lot of earnings, starting with a lot of financials tomorrow. In terms of data, not so much. There's weekly claims. Initial jobless claims will be interesting after the big surge we had last week. I think it'll be volatile. That figure will be volatile for some weeks yet. We also have retail sales. The European Central Bank is now highly expected to cut 25 basis points on Thursday, and this was a big change over the past month, because some of the data came in actually quite poor. So, but at this stage, I think there's a dichotomy between what companies have guided for earnings and what analysts are thinking. So there's a view that perhaps these earnings will, because companies have been cutting costs and doing different things, that the earnings may actually surprise to the upside, and maybe why the stock markets are up so strongly today. I mean, the S&P at 5,850 actually. I mean, sure, we could see it at 6,000. We could see it at 6,000 ahead of the election. Part of it may be that looks like that Donald Trump might be pulling out a little bit to a lead, leading in 6 of the 7 swing states in the latest polls, and he's viewed to be generally more stock market friendly. It's unclear on the bond side, but it's more stock market friendly, because if there's one thing for sure, there'll probably be less regulation with Trump. So maybe why the mood seems to be good in the stocks this morning.
And as Tai mentioned, earnings season is underway, and we'll be keeping an eye on those financial institutions reporting this week, as well as other companies reporting. And as we head into the rest of this year, we have a lot of event risk, right?
Yes.
We have the elections coming up, 21 days. It's so hard to believe.
Wow, 3 weeks, right?
Yeah, 3 weeks. It is Monday, Columbus Day, so yeah, exactly 3 weeks from now. we have November 5th coming up, but we all know that the jobs report will be coming out on November 1st, and then we have Election Day followed by the Fed Reserve meeting, and that means the next rate decision. So we'll be keeping our eyes on all the economic data coming out this week, especially when it comes to the consumer. I'm sure we'll be reporting on the retail sales figure coming out this week.
It seems like looking at the futures, the market is still now 86-87% looking for a 25 basis point cut, and it seems to be the safest route for the Fed. They're continuing taking down their rates, which most people view as well above neutral, but also and they really care about the labor market at this stage, but the two hurricanes that have hit, as well as maybe a little bit of the back end of the port strike, because for the few days that they were striking, maybe some people did actually apply for weekly claims. It's going to be muddy, and I think when it's muddy, it looks highly unlikely they'll want to do 50. They'll probably not want to stop unless something comes out. So 25 basis points, safe, quiet. Most people are happy, not a lot of yelling and screaming. I think that's what the Fed is probably going to want.
And you bring up an important point, because when we think about the upcoming jobs report, the one that's coming out for the month of October, there's so many factors to consider, right? The port strikes, and in addition, the two hurricanes, Hurricane Helene and Milton, and those regions are still pulling themselves out, recovering, and some regions are still closed, and over the weekend I heard about sinkholes in parts of Florida. So a lot of devastation, and that will indeed affect the economic data coming out.
And the employment reports due November 1st, but this week is the survey week. So actually, sorry, I apologize. Last week was the survey week. We'll get the results from the survey week on Thursday for weekly claims. So that may give us an idea, a guide to what November 1st is going to be. So this is probably the number of the week, or the single biggest thing that the market is looking for.
And as you mentioned, weekly jobless claims that come out every week on Thursday morning, that is something that we've been paying close attention to. Usually most of the focus was on the monthly jobs report, but the claims figure has become very important because it gives us an indication of what's happening across the country on a weekly, basis. And Tai, you mentioned that we'll be keeping an eye on the ECB rate decision coming out on Thursday, so I do want to continue our trek around the globe and go to Asia, in particular China, because heading into the weekend we were talking about the announcement coming out from the Finance Ministry of China, and I was reading this note earlier today, and one of the analysts had said that it was actually all sizzle and no steak, which I thought was a funny characterization. But what did you make of what came out this weekend?
So, Saturday morning, I'm looking at this because they had it their Saturday morning by their Saturday evening. Our morning, there were some good write-ups on it. So I would say, in general, it was a little bit of a disappointment. The market was looking for 2 trillion yuan or 283 billion US at current exchange rates in stimulus. Maybe half of that going to the local provinces, which are in a lot of budgetary trouble, and the other half trying to really boost consumer boost consumer spending ahead of the end of the year. They really didn't get that. He just gave promises that we will do what's necessary. There'll be announcements coming in due time, and the market, certainly the analysts were like, wow, that's really exactly as you said, sort of, all sizzle and no steak. Not actually that much sizzle to begin with. So the markets last night, Monday morning, opened in China down, but then they actually closed sort of a little bit higher. And before I go a little further on that, the data over the weekend from China was actually quite disappointing. Their inflation was low, month on month 0 versus 0.4 expected. On a year-on-year basis, they only got 0.4% versus 0.6 expected. That's pretty low for inflation going up barely 0.5% in 1 year. When we're talking about a little bit like sort of Japanese deflationary problems that they had over for practically a generation before they more recently seem to have gotten out of it. And then I think exports, exports were weren't particularly good, and imports were low as well. So the data is bad. So why are the stocks up? If you look at where the Chinese benchmark is basically just over. It has retraced almost 50% of the entire rally. But I think the thinking there is the surprises are all likely to be probably good, that they do announce something and you soar higher. If they don't announce anything, we'll just wait for maybe the next announcement and it might grind lower. So if you're the retail investor, you're a speculator, you're thinking, I don't want to miss out on potentially a very, very big rally. I missed some of it because we were on the Golden Week holiday, and we'd rather be long than short. So I think there's going to be a fair amount of volatility in China, as they try to really figure this out. So what's interesting is I was over late last week. I was doing some thinking about what really is ailing China, and I think we have a little time today to talk about it. If we go to graphic 1, and I'll ask for your forgiveness ahead of time, maybe a little bit of hubris here, but I tried to look at China and say, what are their major problems, and really get it down to 3 things. The first one is what I call malaise, which is why their economic growth is slowing so dramatically. There's just no spirit in the economy. Why do we have this malaise? Government has crushed growth industries like finance, consumer technology, gaming, and tutoring. One result of that is the youth unemployment is 19%, which is extraordinarily high and very, very bad for the outlook. The government instead wants to focus on state-owned enterprises and exports. And finally, they're sort of infrastructured out. They've built so much infrastructure over the past 20 years. How many more bridges and roads can you actually build? So that's one big part. The second big part is the population in China has peaked and will start to shrink, and that will accelerate. So shrink rapidly. So a lower population, more old people who are retiring, fewer people are taking their place, is going to impact GDP growth over the long term. You can stimulate, you can do a lot of things, but if population drops, it's going to be hard to grow the economy. And finally, the world simply just doesn't trust China. You can see over the weekend in Taiwan, around Taiwan, they did more military exercises provocatively because the president of Taiwan gave a speech on October 10th talking about sort of Taiwanese sovereignty. A lot of espionage regarding China that they've been accused of, and economically they're being accused of dumping cheap exports into other markets. So that's in essence the China problem. So how do we solve this? So let's go to graphic 2, which is the China solution. Now, for most democracies, most countries, those are 3 really, really big problems that are very difficult to solve. But China does have the advantage in a case like this of being a state that can, really has a command economy if they want to. They can be authoritarian. So how do we fix the malaise? The first thing is release the brakes on your engines of growth. So not to say, all right, everybody just go wild and crazy, because you really can't change like that and it would look bad for the government, but ease the restrictions on finance, on technology, on these different areas to let the animal spirits come forth again. You've seen that in stock market, but you need that in the real economy ultimately. So I think that's how you start to fix the malaise. Now, most controversial, or second most difficult thing is your population is peaked. And those demographic changes, once they start, are very, very hard to fix. How do you do that? Well, there are, by most estimates, about 90 million empty apartments in China. The government can borrow money, issue bonds. Their bonds are yielding 2%. If you borrow a lot of money, maybe your bonds will yield 4%. But buy a lot of those empty apartments and offer subsidized housing to married couples who have 2 or more children, especially in those 3rd to 5th tier cities that are having a lot of trouble growing. There's a lot of budgetary issues with the provinces. So if you call that, let's say call that 40 million apartments, an average of 1.5 million yuan each, you're talking about 60 trillion yuan, which is $8.5 billion. Trillion dollars. A tremendous amount of money. but your annual GDP is 18 trillion US. So it's affordable. It's a huge undertaking. And maybe if you start it, you get the ball moving at least not in the wrong direction, and you can at least have the population stabilize, and we'll see what happens. And finally, and this actually it actually doesn't cost very much, but maybe the hardest thing to do. How do you rebuild the trust that you've lost over the last 10 years? China grew tremendously because they were friendly. They allowed the sort of capitalism to run the economy while they ran the politics. Well, the first thing to win back your trust is to say to Taiwan, we will never take Taiwan by force. We don't want the blood of our brothers on our hands. When they want to return, we will welcome them with open arms. Now, will people really trust them to say that? Maybe, maybe not, but it's a start. And it takes away from a little bit of a distraction. Maybe sometimes you do want that distraction for various reasons. But if you can rebuild trust with the world that you lost in part due to sort of different crackdowns, as well as what happened with COVID coming out of China, probably an accident, but nevertheless, you're taking steps in the right direction. It can be done. It's not easy, but I think that really is the solution long-term to China. It'll be interesting what they do with it.
And Tai, I'm glad you had graphics for both the China problem as well as the solution, because it really highlights a lot of the major issues here when it comes to the economy, diplomacy, as well as internal growth. And that section you highlighted there in terms of the solution for growth, especially that unemployment rate for the up-and-coming generation, that is considerable. So when you're talking about releasing the brakes for the engine of economic growth, what do you think would actually work here? Because we've talked about the problems and how stimulus might have the engine revving, but in order for the economy to recover and for the sentiment of the people to actually recover, it takes more than just stimulus.
So I think you signal to the financial community, been sort of demonized because President Xi has moved the economy away from sort of conspicuous consumption, which is why I'm actually quite bearish on luxury goods globally as long as this continues, because China is a gigantic market. Nobody's really going to step in there in such a way as they've been. So, LVMH, I'm a little worried about luxuries like that. But I digress. You'd say to the finance community, you want us to be a leader. They said, they're pushing brokerages to merge so they can have, sort of leading banks, world-leading banks, in the next decade. Well, actually, the best way to do that is to let the finance community grow. Let sort of the economic capitalism that was absolutely brilliant from 2000 to 2012. That's former President Jiang Zemin and his proteges. China grew unbelievably. Now, you're not going to have 10-12% growth again. The economy is too mature. Like I said, you've infrastructure out. So you're going to have to build the consumer side. You have to build the services side. Goods are still going to be important, but let the people know that, tutoring was a big business. Ease the restrictions. You don't have to remove them like you removed COVID. And remember, they had the most strict COVID restrictions back, I want to say, the end of 2022, and there was a lot of restlessness in the population. And they were saying, well, we may be building up so much pressure here. And one day they went poof, it was gone. So, many deaths after that, but it was forgotten, and they released the pressure valve. I'm not saying, tell everybody, forget what we said, go nuts. But ease everything back. People can read the tea leaves, don't conspicuously consume, but you want to stoke the fires of the engines of your growth.
And it's interesting you mentioned how luxury brands have been feeling the pinch when it comes to the consumers in China, because the big brands, as you mentioned, LVMH, they've been feeling the Chinese consumer pulling back on their spending there, and that is considerable. But when we think about the population of China, give us an understanding of just how massive the middle class is.
So, just to talk about their demographics a little bit, they went with the Malthusian one-child policy. We actually can't feed everybody. Thomas Malthus was proven wrong, but for some reason they looked at the problem in front of them and said, we need a lower population, right? But they didn't really think ahead. Once we start this happening, and granted, it wasn't as clear 40, 50 years ago when they started it, but once you get that demographic ball rolling, people don't want to have kids, especially if the outlook is bad and the engines for growth is terrible, and people spend tons of money tutoring their kids and getting college degrees, and they can't find a job. People are like, why do I want to have a kid? Housing is really expensive. And all of a sudden they changed that policy probably about 10 years or so back, a little less than that. But nobody wants kids now. So tax breaks or incentives, probably not enough unless you improve the move. But if you offer people, you know what, we're going to give you good housing. May not be in Shanghai or in Peking, but we're going to give you in these different cities, Shenyang, different places like that. You're going to get good jobs because we're restarting the economy, and you're going to get cheap rental housing or cheap, housing that you can buy over time, but only if you have 2 or 3 kids. Will that move the economy back, the population back up again? Maybe, maybe not, but you can certainly stop the acceleration of the collapse, which I think you really need to do. And it's really important for a country. If a country is shrinking, it's really hard to grow the economy.
Yeah, indeed. Before we head into the break, I do want to very quickly take a look at the market and, of course, take a look at Boeing as well, because it is leading the Dow Industrials lower. So all the major equity averages do remain above the flat line, with the Dow, Nasdaq, S&P 500 higher, but we are seeing Boeing lower by about 1.2%, so it's come off its session lows, but Boeing did announce that it plans to cut 10% of its workforce, and there are concerns about a potential downgrade for the company. So what do you make of the latest developments with Boeing?
It's a big cut. They're talking about 10% of the workforce, 17,000 people. And it looks like the new CEO is really, Kelly Ortberg has dug his heels in and saying, I'm not going to knuckle under to what he views as unreasonable demands. And Boeing is a stock that's doesn't look good. Lower highs, lower lows, but my view is Boeing has a put. I don't know if where the put is, what exactly put is. Is it a treasury put? But there's only 2 major aircraft makers left in the world, Airbus and Boeing. And I cannot see how the U.S. will allow Boeing to go bankrupt or get into real trouble. I think somebody steps in here. I mean, I don't know if it's a Taft-Hartley type thing, because Taft-Hartley is really, if it affects the country in a big way, might be something where the administration, whichever administration it is, comes in and sits on it and says, listen, you guys, let's fix this problem. So I'm actually looking to, I have a small, long position in Boeing. I'm looking to add on on if there's a substantial downturn, if there's a downgrade or something like that, there might be an opportunity to add a little bit lower. I do wonder, though, if Kelly Ortberg will survive this, because if the board wanted him, the board needed somebody to clean house, but if the strike continues and there's no movement, you can't fire the company. So sort of like in baseball, you end up firing the manager. So will you fire the CEO? It's not out of the question. And then he'll probably get a really nice package for showing up for maybe 6 months to a year, and get a package out of it. But it's something that bears watching, because neither side is moving here, and they're losing money every day. In terms of that income now won't come until much later in time. Next year, they're moving their 777X, I think, back a year now, when they're going to start delivering those wide, that big long-term jetliner. So it's a big concern, and I want to see how this works out. And
with each passing day, as you mentioned, the company continues to lose money, right? So we'll keep an eye on the situation, and of course, if there are any updates from either side of this negotiation table for Boeing, we will bring you the latest. So we'll continue to monitor Boeing as well as what's happening around the globe. So Tai, as always, thank you so much for joining me at the beginning of a very eventful week here.
Yes, great to be here.
Thank you, Tai. And coming up next, I will be joined by Simeon Hyman, Global Investment Strategist at ProShares. Don't go away, we'll be right back.